and welcome. You watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, it's panned out to be a rather Friday of sorts. After the Trump tariffs have seen a pause of 90 days, that's fueled, further spirits into the D Street, and investor sentiments are up and about. You can see across the board a broad base rally that we are seeing. Frontline index, the Nifty is now up near 2%, 435 points higher. We did also see 22,900 and beyond that on the intraday levels. Nifty Bank is up by 1.6% at 51,045, over 800 points of a gain on this one. All the sectors of the Nifty are up into the green, especially led by the strong rally in the metals pack. The index is up by over 4%. Look at the consumer durables index. There's a 3% of an uptick on that one. The broader markets, small caps and mid caps, are also healthy at this point in time. Near 3% of an uptick on the small caps, mid caps up by 2% today. Pharma, oil and gas, infra, autos, these are the other pockets that are also rallying in trade. It's India VIX, that's the only index that's down by 6% at 20.1 levels. The top stocks that are moving sharply in momentum today are the metals on the Nifty, Hindalco, Tata Steel, JSW Steel, Coal India, ONGC. The commodity space clearly taking the front row today. PSU stocks are up by 2.6%. You also have a lot of stocks in the F&O space that are also buzzing. Look at PI Industries, for instance. There's a near 10% move on that one. Poonawalla FinCorp is up by 8.8%. SRF is also sharply higher in trade. Let's look at on the Nifty, barring the three stocks, 47 stocks are actually into the green. Asian Paints, TCS and Apollo Hospitals, the only three stocks that are down by about 0.5% to 0.7% in trade. But rest of the stocks are all buzzing. You can also see stronger gains in the broadest index, that's the Nifty 500 one. Let's actually welcome our guest on board. Kunal Rambia joins us, the founder of The Streets, and to share with us the market perspective. Kunal, good to have you with us. Well, you've actually joined us after a whole host of things have happened. We have seen the Trump tariff tantrum, blows, turmoil in the markets as well, and now finally a pause that's coming in by way of some relief. What is your sense on the markets?
Thank you so much for having me on the show, Sakshi, and good afternoon to all our viewers also. Yes, it's been a pretty long time. I'm back on the channel now. But if you look at the Jan 2025 levels, we are at 22,800. Again, today we are at the same level. Though in between we saw the levels of 23,800, on the lower side 21,800, but back to that same consolidation zone itself. So unless, again, we were discussing the same thing at the time when I was regular, that unless the Nifty makes a higher top, higher bottom formation, I think this sideways consolidation is likely to continue. And the same view is still intact. On the lower side, 22,000 to 22,250 level is something to watch out as a support. On the higher side, 23,800 is a resistance. And I think indices might just continue in this consolidation phase for a while before starting a new rally on the upside.
Okay, fair point. But I have to ask you, for investors, what does it mean really, Kunal? Because, they have been really navigating through a lot of uncertainty of late, especially after in April per se, there has been so much of a noise around on an everyday basis, statements changing and the markets reacting that way. In the build up to April 2nd, March also did see a lot of volatility. Now when there is a pause of 90 days odd, we are hoping that beyond the 10% baseline, even if Trump government wants to apply some tariffs to various sectors, that should come in only after 90 days. In the interim, how do you advise investors to rebalance their portfolios?
So now, Sakshi, again, this is a point which we have been discussing since quite a long time regularly, that market discounts everything. These things were somewhere known to those markets participants who must have seen the markets between 2017 to 2020, where Mr. Donald Trump was in power again. And I very well remember those sleepless nights at that point in time in my career also because of his overnight statements. But this time, at least one thing is very sure, that markets gave us enough time to rebalance our portfolio. And now, at this point in time, we are at that level on many of the stocks, which are down by 40 to 50%, consolidating really well. And the risk reward ratio is extremely good. I'm not suggesting to look at the index and go ahead with the stocks, mid cap and small caps, but individually evaluate the stocks. If you find that the counters have rallied a lot in the year 2024 and they are back to the bottom of 24, I think this is a good time to accumulate those counters. So likes of JK papers, or you take up a REC, PFC, ONGC, these
Yeah.
counters are looking very attractive to me because my risk reward ratio is extremely favorable on these counters. And if you have a long term horizon, I think this can be a good opportunity to accumulate with extremely near stop losses in place.
Okay, so JK Paper, REC, PFC, and ONGC as some of the stocks that Kunal is looking at. ONGC today is up 4%. But I want to bring in this point that crude oil prices are softening. How do you believe that ONGC will continue to benefit despite lower crude oil prices?
So again, look at the crude oil price movement again on the historical data. So somewhere near August 2021, crude oil prices came down to 4,700 rupees. I'm talking about MCX prices. Again, in November 21, it was the bottom. And recently, ongoing week, the bottom is at 4798. I think this 4700 is seen as a strong support on the crude oil prices in last 4 years. If it holds at this level, I think crude oil might just consolidate and rebound. The rebounding level which I'm expecting is around 5,500 rupees. Considering that, I think ONGC should do well from here. And this is what is seen even on the price action front.
Okay. I also wanted to understand, of course, we have seen this relief rally, short covering rally, so to speak, today after that 90-day pause. You did also talk about that how markets usually tend to digest all good and bad once it comes in and then focuses on the future course of action. The big question is, can this relief rally really sustain going forward? And, how much upside can we really expect? Is there still a lot of resistance that needs to be taken out?
So on the Nifty front, it's very clear that unless we see 23,800, 24,000 levels taken out, I will not be really keen to go positionally long on the index. As far as the trades are concerned, fine. 22,100, 150 can be good support. On the upside, 23,800 can be a target. So this is on the index specific. But if I talk about stocks, I'm very, very comfortable. So again, as we just discussed, looking at index, we will not create positions in stocks now because that gung ho rally which we saw probably in
Yeah.
23-24 is almost done. So from here on, stock specific moves might continue as well.
Right. Another space that I wanted to ask you is the FPI outflows that are sustaining despite all of this uncertainty. March final week did see some buying from FPIs, but after that, again in April, so far 32,000 odd crore rupees has been pulled out by the FPIs yet again. Now there has been a lot of talk about, you would have been seeing how and participating in discussions as to how India compares vis-a-vis other Asian countries when it comes to tariffs. First we were tariffed lesser than the other Asian peers. Now there is a pause, but vis-a-vis China we are far better off because 145% of a tariff vis-a-vis 10% is nothing at this point in time. But then why is it that the FPIs are not able to garner the strength of looking at India as a positive?
So we do have currency effect also coming in place, right? So we saw Indian currency depreciating vis-a-vis other countries' currencies, but our depreciation is far lesser than the other countries. That's number one. Second thing is that when I look at the comparative performance, Indian markets have really performed better compared to rest of the Asian peers. If I look at last 1 year data, we are just negative by 1% as of the day on the index, whereas the other indices are down even more. And if I consolidate the numbers of last 10 years FPI inflow, this outflow which we have seen in the recent 6 to 7 months, though it's looking big in terms of magnitude, but in percentage terms, it's not even 8% compared to last 10 years inflow. So somewhat profit booking at this elevated levels for them might as well make some sense. I really don't know the reason behind extreme selling in few counters, which are a bit surprising for me also. But look at HDFC, Axis, ICICI, Kotak Bank. These are still trading near the high itself. Any profit booking here, considering that the indices might as well continue with sideways consolidation from here for a year, would make sense. Rather, I would buy now. I'll wait for some clarity, and I'll think of buying those mid caps and small caps. So we might see inflow coming probably in the month of June or July. Post we see some monsoon numbers also coming in.
Okay, got that. Let's actually discuss on the domestic trigger that's at hand, the earnings season that's kick-started with TCS reporting its earnings. There was already a muted expectation, and it's largely come in line or slightly just below the estimates on the growth figures. Even though the contract value TCV continues to be strong, but there's softness in India market, US and Europe continue to be soft as well. They have deferred the wage hikes amidst uncertainties too. A lot can be really taken in from the largest player that could trickle down the line with all the other players which are lined up to report the earnings. Let's start off by IT and then we can come to the other spaces too on the earnings aspect.
See again, Sakshi, just have a look at historical data from 21 so far. TCS has always come down near 3000, and from there we have seen the bounce coming in. The first bounce was somewhere in the year 21-22, where it bounced from 3000 to almost 4000, back to the same level of 3000 in September, and we saw the high of 4500. Recently, in this present week, it has made low of 3056, and it's down by around 33% from the peak level. After seeing yesterday's numbers, I'm very, very comfortable at this level, considering the fact that the price action also supports the same. If the counter holds on to 3000 level, this can be a wonderful buying opportunity. For the in the entire IT pack, I'm just comfortable with two counters. First is TCS, second is Infosys, where I'm getting this comfort of trading as well as investing. I'm just recommending one strategy to all our viewers, that if someone is comfortable buying Infi and TCS in futures, then
Yeah.
create short straddle and go long on the futures. I think consolidation might as well continue, and we might as well end up making around 7 to 8% on the combined premium at this present level.
Okay. Then beyond IT, where else are you really looking forward to? Where do you believe that in Q4 we can see outperformance despite the uncertainties that is going around? The domestic cues and the performances updates so far continue to point to an outperformance.
I'm very comfortable with metal index. Now,
Okay.
after the recent performance, there the counters have come down significantly. Even index is down by around 25%. I'm talking of Nifty metal index, which is right now at 8,170. I think this time correction of last entire year and the price correction of 25% is giving me good opportunity and that room for comfort on risk reward front. So likes of Tata Steel or say Steel Authority of India, JSW Steel, these counters are looking good to me and can be considered as a buying opportunity. Though JSW Steel went up significantly in the recent times, just 3-4 days back, it was trading near 900. It's now trading at 1000. That confirms that people are watching at, these deep pocket guys are actually watching at these counters. So worth considering this entire metal pack as a buy on dip for next 1 to 2 months at least.
Okay, fair point. Got that as well. Is there a space that you would still continue to be extremely cautious on and would probably say that the earnings this time also could be damp squib and therefore better to stay away at least for the next few months from that space?
So auto pack is something where I'm a little cautious. I'm not expecting extreme negative numbers coming in, but I'm not very bullish also. So auto pack is something which I'll avoid for now.
Okay.
Consumption was considered to be a kind of caution, but looking at the price action in the recent times, again, that's not really a worry from the quarter results point of view. So I think I'll stay away from auto for now. All other counters are looking okay too.
Okay. I also wanted to ask you, when it comes to investing in the markets, we've also seen AMFI numbers now. Of course, there's a 4-month consecutive slight moderation on the entire SIP flow that we have been getting. Now it's come down to 25,926, so just about marginal 0.2% of a decline. But there's outflow and a sharp decline in several pockets. So mid caps have seen a decline of 86%. There's an outflow on liquid funds as well, equity mutual funds too. And what we are looking at is that even debt funds are seeing a fall, and even gold ETFs have seen minor, but an outflow this time around as well. So what really, would you understand from the sentiments that are going around within the mutual funds aspect as well? And what would be your advice to mutual fund SIP investors?
See, once the SIP is started by anyone, it's very
Yeah.
clear concept that irrespective of the market sentiments, one should continue for long period of time. Now it depends on how do you define the long term. If your target is to make X percentage returns out of it, probably once you achieve it, you should stop. But during market panic, it's a time where you actually should think of adding a bit of lump sum amount also. When you're getting the opportunity to buy the stocks at 40% and 50% lower levels, why should one stop the SIP and forget about SIP? Why should one not invest in the market is a big question mark even in my mind. I would always advise that the big wealth, I mean, we all know this, right? That the big wealth is created in the market always by holding the positions and
Yeah.
buying in the panic situation. So it's the time where the good counters are available to us at mouth-watering levels. One should actually think of short-term trading also, and this is a time where you can actually go all in the market. Again, I'm not talking about large caps. I'm talking about specifically mid caps and small caps, where the SIP returns, I mean, the mutual fund returns have been muted and negative. I think this is a time to pop up a bit of SIP and continue for long term. SIP investors should not even look at the markets itself. And in such
Okay.
kind of situations where the markets are down by 10-15% further, they should increase their allocation also.
Okay, got that. What about gold? I wanted to ask you this. All-time highs. I mean, like there is no stopping this space at all. I mean, we've already seen what in FY25, the financial year gone by, 32% of a spike on gold. But beyond that, I mean, we are seeing in the domestic market prices surging over 93,000 rupees per 10 grams as well. Um, where will this stop? And there is a lot of FOMO again happening now among people as to whether they should go all out and buy gold at this point in time, or is there a huge risk to buy gold at this level?
See, Sakshi, this is the only problem. I mean, if we are in the trend, it's absolutely comfortable holding the position. Just 4 days back, gold was
Yeah.
peaking near the bottoms near 86,000, and look at present level, it's at 93,500 levels.
Yeah.
My worry is that why someone wants to buy when the position, the counter is, or say a particular asset is at the peak. One should be buying when there is a panic in that situation, right? So if someone is holding on to the gold, it's absolutely fine. Please stay on to it, but don't buy at this elevated level, considering this rally will continue and that that FOMO has to be controlled. So I'm not comfortable creating new positions at this level. But if someone wants to buy gold, I'll suggest a level, and that's 85,000 in my mind. If it
Okay.
comes near 85,000, I think that can be a good level from the risk reward point of view. One can think of initiating buy at that level. But if someone is already holding, please stay invested. Nothing
Yeah.
wrong. On the higher side, I am expecting the levels of 96,500 to 97,000 will reevaluate at that time and buy any chance. If markets at that time are at new low levels,
Yeah.
I would then probably think of balancing my portfolio, reducing gold exposure, and coming to markets again.
Okay, got that. So that's the strategy that everybody needs to keep in mind at this point in time. Please leave alone the FOMO. In case you're holding on, hold on. But in case you're looking to add a fresh or buy a fresh, then look at some dips only to enter and don't enter at this point in time. The upside could be near term limited on gold at this point in time is what Kunal is really hinting at. Right. The other space that I wanted to bring in is what we've been discussing, consumption all along. Now I want to understand between consumer staples, discretionary, durables. What exactly looks attractive to you? There are two triggers that have happened. Fiscal policy, that's the budget incentives that have come in. Monetary policy tax cuts twice in 2 months that have come in as well. All of it coming together to boost consumption. Where do you think this money can go?
I think durables and consumption story looks attractive to me. Even on the index front, let's just evaluate first Nifty consumer durable index, which was trading near to 44,000. It it made low as 32,000, and now it's trading at 36. And just last 3 to 4 days, the significant upside was seen in this. I think more or less the longer term trend on the consumer durables remains intact, and this can be a good level to initiate by. This year will give us enough opportunities for investing as well as for trading. So even if someone is looking at trading perspective, I think consumer durable can offer good levels, good trading opportunity also. And coming to FMCG, again, I'm very, very comfortable. The only counter which I have shortlisted as of now is Hindustan Unilever, which is looking very good to me. Index per se has also recovered from 50,000 levels to 55,000 levels in just the span of around a month itself. looking very good to me. Upside can be till 60,000, so 5,000 points more to go on it. HUL is looking good to me in the entire space as well.
Okay, HUL is looking good to you in the entire space as well. Okay, Kunal, it's 3:20. I think just the right time to understand any BTST, STBT trades. Remember, we're going into a longer weekend, so we have Saturday, Sunday, and Monday, which will be off, and we'll be only back on Tuesday. And we don't know what happens tonight in the US. We don't know what happens on Monday. We'll be back after 2 days of the kind of news flows that we'll be getting, 2 days of cues from the Wall Street and the Asian markets as well. And therefore, we'll be opening on Tuesday. But if one has to still pick out BTST or STBT trades, what would those be?
Actually, as you rightly mentioned, long weekend and even the next week is truncated weeks because again the
Yes.
Friday is holiday. So one should not again look at very short-term trades, but the counters where I'm finding a lot of comfort. The first is Ramki Infra. This counter is up by around 8.5%, 8% in today's session. Right bounced from the low levels. The strong support on the chart is 420. Consider that to be the long-term support and think of buying in dips if the counter comes near 430, 435. I think that can be a good level to initiate buy. The second is JK paper, which I discussed in the beginning, right near consolidating near the support since almost the month. I think good support on the chart is 310. This can also be taken as a long-term bet. The third is Kaveri Seed. Now, this counter we have discussed multiple times, even in the past. During budget also, we had discussed about it. That time it
Yeah.
was trading near 940, 950 levels. Today, it's near that 52 weeks high, 1425. My conviction is very high on this. If the counter comes near 1300 in next 1.5 week, I think that can be good level to initiate buy. So not immediate BTST, but these are 3-4 counters which one can look at for next 15 to 20 days, and buy on dip can be a good, advisable, not just BTST.
Okay, fair point. So those are the key ideas. I hope everybody's noted them down. I'm going to be just talking about a few top gainers today. Look at what's happening with Gravita India at 1888. It's 18.5% higher in trade, a 295 rupee of a jump. Orient Pro Solutions is another one. There's a 14% kind of a jump on this one, trading near day's high. Sarda Energy, 11% higher. Car Trade Tech, after a long haul, strong momentum here. You can also see another 11% of a surge at 1536 on this one. Atul Limited is up by about 11 odd percent as well. So those are some of the movers that are actually trading with strong moves in today's trading session. Let's also pull up any 52-week highs. Well, you have Chambal Fertilizers, that's at a 52-week high. You have Coromandel International as well, that's also at a high. And within that same space, Kaveri Seeds is something that Kunal has just marked. But from all the names that I took, Kunal, anything that catches your attention? Strong moves, double-digit gains on most of these stocks that I marked?
So the first is Atul. The only reason
Okay.
being counter has started right from the bottom level. So strong support, which I was expecting at the bottom somewhere near to 5,200. Surprisingly, it made low of 4,750. I was
Yeah.
scared for that day, I thinking that this entire trend might just come to an end. But look at the sharp recovery and look at the volume activity today. It's huge. 9,50,000 shares have been traded today, and counter has reclaimed that lost ground. So with the stop of 5,300, one can certainly go long on Atul. And the second is again this Kaveri and Chambal, because the rain expectations have been laid down by the authorities, right? So if this normal rain is expected, these fertilizer counters may do good. So the buy on dip can be good strategy. Chambal ka level support level is around 590. Consider that as a good level to think of initiating long term buy on it.
Okay, fair point. I hope this has also helped all our viewers out. 6 minutes to go before the markets shut shop. If I have to ask you for a strategy now for both Nifty and the Nifty Bank, which one between the two looks better to you, Kunal?
So I'll be more now comfortable with Nifty because it has just bounced from the extreme support levels of 21,800. So consider that index for trading from short term to mid term rather than Bank Nifty. 21,800 is a strong support. Consider that level. By any chance, if we see a decline or dip till 22,200, I think that can be the level to create short straddle and long futures. That can be good index based strategy for Bank Nifty. Either Bank Nifty should go above 52,000 level or it should come down to 49,500. Then we'll think of initiating some trade there. But out of two, from risk reward point of view, I think Nifty is looking attractive. And this is the index which I'll be trading for next 3 days, at least of the next week.
Okay, got that. I hope this has also helped all our viewers out right there. Well, thank you so much then, Kunal, for being with us on the closing edition today and helping us navigate through the fresh move in the markets and, of course, sharing an outlook with key stock opportunities that lie. Always appreciate your presence and hope you have a great and fantastic weekend ahead. It's turned out to be
Thank
a
you so much
Friday. We
for having
hope
me
the
on the show,
weekend
man.
also turns out to be well. Yes, thank you. Let's look at now wrapping up the closing action for all of you viewers. 22,834 on the Nifty. You have a 435 points of an uptick. There's a near 2% uptick now. Even though we've not managed to close above that 22,900, we did test it intraday. 51,000 hopefully will stay for the Nifty Bank at the closing action. 766 points higher, a 1.5% move. All the sectors up and about, although the IT sector has actually come off its day's highest point, and you can see just a 0.8% of an uptick. All the sectors though are up. Metals are continue to shine bright over with 4% gains. Consumer durables 3% up. Pharma up 2.4%, oil and gas over 2%, autos up 2%. At least 5 indices are up by over 2% today, and apart from this, almost 7 indices are up by over 1% each as well. So strong moves that can be seen across the sectors. Metals, they have been the top moving space today, and therefore on the Nifty as well. You also have names like Geo Financial Services, very interesting moves on this one, 4.5% higher. Adani Enterprises about 3.7% up. Grasim, ONGC, these are some of the other stocks that are buzzing. On the lower end, only TCS post earnings. It's ending the day softer by 0.4% of a decline. Apollo Hospitals about say 0.6% lower. Asian Paints about 0.8% lower as well. So those are the only 3 stocks that are declining. PI Industries, Poonawalla Fincorp, SRF, Inox Wind, Aarti Industries as some of the stocks. In fact, one of our guests did mention Aarti Industries as his top bet in the morning edition today. 8 to 9% of a move that's actually coming in onto all of these strong F&O movers. On the lower end, Muthoot Finance, 6% lower. Remember, the draft guidelines from the RBI tightening of the rules on the gold loans is definitely coming down heavy on this one. ICICI Lombard, Max Healthcare, ICICI Pru, some insurance names also dragging in trade, not really contributing that much on this space today. Let's look at the broader markets. That's where all the action has been today. Strong moves that's been seen throughout the trading session today. Camlin Fine Sciences, 20% circuit. Goldium International, about 20% move on this one. Gravita India 19% higher now. BL Kashyap and Sons, that's about a 16% move. You also have names like Inox Green, that's up 12%. Orient Pro Solutions 13%. Sarda Energy is up by about 12% in trade. Pondi Oxides, that's another one that's moving. You can also see names like Sangvi Movers, 11% higher. Cartrade Technologies, about 11% up. LT Foods, another export-oriented name. You have about 11% move on this one. UMA Exports, another one, 10.5% higher. Dredging Corporation of India, about 11% higher. Some such names have actually stood out in today's trading session as well. The Nifty next 50 names, Adani Group stocks definitely in focus today. You also have names like say RECPFC also buzzing in the Nifty next 50 names, PSU names. Some of the other names that are in focus are Samvardhan Motherson, DV's Laboratories, LTI Mindtree, Zydus Life, some of these names also buzzing in trade, and of course Atul Limited, we discussed 10% move on that one. Small caps definitely almost 3% higher for this index, and that also moved up. CDSL also about 2.5% higher. Brain B Solutions, that's First Cry, also moving up. So New Age, recently listed stocks, that's also buzzing in trade. All of these stocks up and about on Friday. Just one last minute to go, and we are at 22,850. Let's hope that this at least sustains. 443 points higher on the Nifty. If we look at the chart of the Nifty, you will get to see that we did go up beyond 22,900, came down just quite a bit, and then we are back above. We've tried to manage to pull up, beyond 22,840. At this point in time, that's where the screen has frozen, 22,842. All right, viewers, we'll leave you at that on the Markets Today edition, but do stay tuned as coverage continues from the world of business and economics right after the market hours as well. Stay tuned.
Hello and welcome. India's largest information technology company, TCS, has reported its numbers for the